We are going to talk about Tesla in this video. Over the course of 1 year, down 11.6%. Year to date, up 126.65%. We're going to hop over to their earnings release. Profitability, 9.6% operating margin. Their operating margin remained healthy at approximately 10%, even with price reductions in Q1 and Q2 on their vehicles. This reflects their ongoing cost reduction efforts. Um, their dojo they're working on their dojo training computers for their AI program. Their Cybertruck factory tooling is on track. Right now it's in their release candidate stage. So I really like this summary that they have in their release here. They have in conclusion, we are focusing on cost reduction, new product development that will enable future growth, investments in R&D, better vehicle financing options, continuous product improvement, and generation of free cash flow. So the challenges of these uncertain times are not over, but we believe we have the right ingredients for the long-term success of the business through a variety of high potential projects. So come down here to the financial summary. Overall, Tesla's gross margin is declining, which they've been very transparent about. The gross margin down 25 from 25 down to 18.2%. Their operating expenses were 10.4. They're now down to 8.6, so that's good. Their free cash flow was 621 million this time last year, up to 1 billion this quarter this year. And they brought down about $670 million to their cash and cash equivalents. So that's nice to see. One of the key things I saw overall on their operational summary, obviously we know their vehicles continue to get bought. Their growth on their vehicle, deliveries and everything is up nicely. One of the things that I noticed I didn't really know too much about was their storage deployment of their these big mega packs, these big battery packs. Um, this thing is a bit, and they're just what they are is it's just a big battery, and this one battery is infinitely scalable. So if you want to get 10,000 of them, but you can do it 100 a year or something like that, you can do that because they apparently just link up with one another. Um, on these batteries, these specific ones, if you buy one mega pack, their annual maintenance fee on these, I'm sure there might be something in the contract. Maybe Tesla has to come out and maintenance these every year. But if they do, it's an $8,400 charge annually and goes up 2% every year. That's on one pack. But if you get like 10 packs, it looks like they give you a little bit of a price reduction on their or cost reduction on their annual maintenance there. So now it's 53 instead of it would be $84,000 or something. But yeah, one of these things can power 3,600 homes for 1 hour, which, if you have a power outage, at least around me, if we have a power outage, it's like maybe an hour at the most. And I think almost like one or two of these would cover where I live anyway. Maybe probably a bit more than that, but still, I mean, that's pretty cool. So we keep scrolling down here. We got the core technology side of things. So Tesla's saying there is four main technology pillars that are needed to solve vehicle autonomy. Extremely large real world data set, neural net training, vehicle hardware, and vehicle software. So they are developing each one of these pillars in-house. This month, they are taking a step towards faster and cheaper neural net training with the start production of their Dojo training computer. So right here on the solar side of things, they said that solar here year over year, predominantly due to a high interest rate environment that is causing postponement of solar purchasing industry wide. So basically, if you own any type of solar company, uh, might be in for a bit of a bumpy ride here for the next maybe year before interest rates start declining. Another key thing that I really liked when they released this news was that in the second quarter of 23, There was a significant number of companies, including Ford, GM, Mercedes, Nissan, Polestar, Rivian, Volvo, and Electrify America, have announced the adoption of the NACS. So now Tesla is the go-to standard for all EVs. So that's in my eyes, that's pretty exciting because then Tesla can put their charging stations anywhere. They don't have to make a specific, quote unquote gas station for Tesla superchargers. They can put these things at mall parking lots and businesses and all sorts of places. And the bonus to that too is that Tesla covers the cost of all these installs. And typically, business owners that, have these installed on their parking lot, the bonus to them is that it drives in customers and Tesla reaps the rewards. Tesla pays for the electricity cost, but then that cost gets placed on you when you charge your car, and then they make a little bit of money on top of that, even. So Tesla's outlook, they're saying they have ample amount of capital to fund their current product roadmap, long-term capacity expansion plans, and other expenses. Also, their profit. We will continue to execute on innovation to reduce the cost of manufacturing and operations over time. We expect our hardware-related profits to be accompanied by acceleration of AI, software, and fleet-based profits. So now we'll head over here to the valuation spreadsheet and a little bit of a spoiler alert. Tesla is overvalued in case nobody already knew that. Uh, Tesla, current return on invested capital solid at 26%. The future EPS growth rate of 3 years is 18.74. The future revenue growth rate is 25.56%. Gives them Peter Lynch value here, 0.26. Gives them a fair value price of $25.95, or sorry, $65.95. We have a few multiples here to compare to for Tesla. I think Tesla's its own animal, but I mean, they do produce cars, right? So Tesla currently based on multiples on peers, it is at $27.09. Manual PE, this is one of those big ones that tells me that how overvalued Tesla actually is at its current state. That, for Tesla to grow to its current market cap, it'll take about 56 years. Over here, price to book, Tesla currently has about $90 billion in assets, $38 billion in debt, with 3.4 billion shares outstanding. Gives them a price to book today of 16.26, which is an average price to book of 20. So from where it's previously traded, it's trading cheap. It's not cheap, but it's trading cheap compared to where it has traded in the past. PEG ratio shown that it's still significantly overvalued, even based on forward-looking price to earnings to growth. Over here, Graham's valuation, I put in 0. This is more of a growth company still, not more of an established, mature company. Today's corporate bonds are 4.87%, gives us an intrinsic value of $27.03. DCF, we got all of our numbers plugged in. Weighted average cost of capital for Tesla is 13.5. It comes over to here. Perpetual growth rate 2.5. Growth rate of free cash flow is 30%. The average growth rate based on these numbers here was negative. However, the annual growth rate is 30. Because this is a growth company, I'm going to go with the analyst and go with 30.24. Now that 0.2 is really going to matter there, but so based on all of our previous cash flow from operations in 2017, we had negative, 2018 negative, and now we're starting, as of 2019, we started to see cash flow positive. And this is like what you want to always see. Okay, really negative, almost 0. Now we're starting to turn positive. Now we're doubled it. And now we're on track to almost, not quite double yet. So we're slowing down a little bit, but still on a very good trajectory of free cash flow going forward. So nice to see that. So I do believe that 30% might even be a bit low, because of how it actually has continuously and consistently grown in the last 6 years like that. So, but overall, that gives us a discounted cash flow price per share of $58.20. All right, Rule 72, current EPS 352. We had two growth rates here. I believe that I believe Tesla can grow quicker and higher than what these two are, but we're just going to go with 15 between the two of them. And that gives us, well, 15 goes into 72, 4.8 times. That 4.8 goes in 10 years, two times. So it gives us a future EPS of 14. I put 14.5. So that gives us a fair value of $135.84 a share with 30% margin of safety of $95. So our summary, overall summary of all of our valuations here, Tesla is very, I mean, it's not much of a surprise, but it is overvalued. At this point, you're just buying the company, you're buying the name if you're investing into it, or you're just trading the chart, which we'll take a peek at here in just a second. So overall, average price of Tesla, basically $63 a share is fair market value. Purchase price of $44 a share. Well, that's a 30% margin of safety. So the good things of Tesla, very solid balance sheet. They got a very intelligent CEO running the company, Elon Musk. I mean, very smart guy. Very obvious that he knows what he's doing, and he's got a good team behind him as well. Return on invested capital, 26.1%. They're growing rapidly. They have been, no surprise. Even with their price reduction on their vehicles, they're still doing a good job. They're expanding their business. They're utilizing all of their services and their products and offering them to other car manufacturers to generate more cash flow. I mean, fantastic idea. They've put in the front work and now, hey, jump onto our service, but we're going to charge you X number of dollars or a monthly fee or something like that. Um, they already have a form of passive income with the supercharging stations now that most car manufacturers in America have adopted these Tesla charging stations, I think is a brilliant idea. And the fact that they were able to, successfully do that to be the main charging station like that, I I think that's going to be pretty big for Tesla going forward. Um, the bad that I could come up with here is really it's just overvalued today. Probably not overvalued if you look into 5 years from now. It's probably fairly valued or based possibly even undervalued. Um, but based on what they're doing, it's possible that today is a very good deal. If you look back 5 years from now to today, you're like, man, I should have bought Tesla at $245 a share because now it's $600 a share. It's very likely, based on how Tesla grows and stuff like that. I think that, and with how more products and how much more stuff they can provide yet, they're not even maxed out. There's still so much more room for them to grow that, I do believe that Tesla has a good future ahead of itself. Um, but I put a little note in here. My goal on these videos is to find the fair market value of a company, right? And to look over the balance sheet and see if I can't find any red flags that I personally that I see that I've seen in the past that, it's like, oh, stay away from that. And really it's up to you guys to figure out if you want to pay $245 for a company that's currently valued at $63 a share, But, personally, I think Tesla is a great company, very well ran company. I think it just needs to just chill out for a little bit, grow into its valuation just a little bit, and then reassess what Tesla's doing and then see, okay, now is a good time to buy Tesla. I mean, I think Tesla, at least for the foreseeable future, is always going to trade at a higher valuation than what it's currently worth. So, you're paying for all of this. You got all sorts of good things to look at, and you're paying a premium for it, like a really really high premium for it, but it seems to pay off in the end, at least so far. Over here, stock chart. Tesla hit $415 in, what was that, end of 2021, and was in a nice little channel here, downtrend channel. Hit $101 a share at one point there, and boy, that would have been a perfect time to pick up Tesla. That would have been really, really good. But that's hindsight for you. But anyway, so here's where we're at right now. We're in this upward channel. Tesla had just recently pulled back to basically a convergence of three different trend lines here, and it bounced right off of it. Just took right off, hit it close to it anyway, and just boom, higher. Now, Tesla, in my opinion, looks like because of this candle, it might come back, retest, and then might resume back up higher. Based on price action, that's kind of what it looks like. Whenever you have a big topping tail on a weekly candle, kind of indicates, oh, all right, that was the end of that move. Although it could continue to go higher, it could just chill and then higher. So we'll have to wait and see what Tesla does. But right now, it's in this upward channel, and Tesla overall, technically speaking, looks really good. Fundamentally speaking, on the overall valuations, um, just know that if you do buy Tesla, that this is what all the of the 8 valuation methods that get used, this is only 5 of them produce an actual number behind them, but like a price tag. But based on 5 different valuations, every single one of them is coming in, you know, pretty, less than $100 a share. So that's my take on Tesla. I think Tesla's a fantastic company. I think it's got a good future ahead of itself. I've got nothing bad to say about Tesla whatsoever. But put a comment down below what you guys think of Tesla, what you think Tesla's future has for itself too. I always like to hear what other people have to say about that, side of things. But yeah, that's it for Tesla. If you found value in this video, if you wouldn't mind hitting the like button and subscribing, and we'll be back tomorrow with another stock analysis video.